All right. So you want to know what a 1099 is to work for me. So first off, you got to know what a 1099 is. So a 1099 basically means that you are a landscape or you are a subcontractor in general. All right. So being a 1099 means that you're technically your own business. You're a sole proprietor. You're a sole proprietor. And many sole proprietors, they have something called a DBA. A DBA. And that basically means doing business as. So, what is a 1099? A 1099, you're a subcontractor, and basically, in legal sense, it means that I can't personally tell you what time to show up and tell you your own schedule. I just have to tell you to do your own work. Now, of course, working for me, it's going to be a little bit of different terms, and I'll take it and do what I want with what the government says. And if I'm just like, hey, you want to show up, whenever, it's not going to be like, oh yeah, I can call off whenever. It's not like that, for at least working for me. All right. So here's the benefits of being a 1099. Number one, you can put on your resume that you are a landscape subcontractor. Do what you want with that. If you go to work for somebody else, saying that you're a landscape subcontractor benefits you. So here's one thing that you do have to know. So when you are a subcontractor, you get taxed at a certain tax bracket. So if you're a small business, you're taxed at like 30% or whatever it is, and of course you have all that. But being a DBA or a sole proprietor, you have the same incentives as businesses do. So number one, you can track your miles, your business miles. Whenever you drive to work, whenever you drive back from work, you can track your miles, and I think you get 53 cents. Oh, that is awful. You get 53 cents back per mile, I believe. Don't hold me to it, but 53 cents per mile. Now, you only can do work miles. Don't try to cheat the government, because you do have to give your odometer readings and whatever else. But just track it. Do it accurately. Do it. Don't try to lie to the government, because I won't help if they come after you. I won't. All right. Number two, food. I do pay for basically all work meals, and that helps me out. Benefits. Let's say you get food after work, or really you can write off any time you go out and get food, as long as you're not in Disneyland. They're just like, wait, why were you at Disneyland if you get audited? Audited basically means that the government comes after you and doesn't believe that you turned in your tax stuff correctly. But food, if you go out to eat whatever, people ask you about work, it's considered a business meal. So you get whatever the full amount of that as a write-off. And so you get food, miles, you get work clothes, like pants. We're doing pants, all right? Work pants, boots. If you buy gloves for some reason, I buy gloves, so you shouldn't have to. I buy shirts, sweatshirts, whatever else. But you can write those off. So like the Duluth pants, those things are like $80 each. So you can write all that stuff off, and of course you get the full amount there. So you get all that stuff right there. And you're just like, wait, why would I even keep track of this? All right. So let's say, and here we go. So now we have a tax bracket right here. I don't know if you guys can see this because I had to flip my phone around, but here we go. Tax bracket. So it basically works up to 10. It's 10%. You're taxed 10% on what you make. Under, I believe it's 9,600. All right. So 10%, 9,600, 12% under, I believe it's 19,600, we'll say. Most of you guys should be around here, and then it goes up to 14%, I believe. Don't hold me to it, but I believe it's going to be like 30,300, and mind you, when I say 9,600, it's like $9,654 and like 28 cents. It's stupid, and that's just the government for you. All right. So you just have all these, and then it goes up from there, and then you get into these tax brackets, and you're doing all this other stuff. So, anyways, most of you guys should be under here, and basically what we'll do is at the beginning of the year, I'll be like, all right, so how many hours can you work a week? You're just like, all right, I can work, let's say 10 hours a week for summer, which is 10 weeks. Wait, no. We'll make it simple. 10 hours a week. No, that's stupid. That's really stupid. 20 hours a week, 10 weeks equals 200 hours. Let's say 200 hours, and you're making $20 an hour. What is that? Like $4,000? 4 G's. All right. 4 G's. You're making under. So 10% is this number, 9,600, and under. All right. You get taxed at 10%. So, and that's the other thing. You start getting taxed for a 1099 at, I believe it's $680. So if you work for me and you work for like a week or something, and then you decide, man, this dude, I'm not doing this. you don't get taxed. All right. I'm not saying do that, but it's up to you. If you don't want to work, is what it is. So let's say you're making 4 G's a year, working 20 hours a week over the summer. That's like part-time, And so you're doing this, and then let's say you buy 800. Wow, that is awful. 8. Wow. You're buying $800 worth of food, pants, whatever, and then your mileage. CPA will take care of that. CPA is certified public tax accountant, and they will take care of that. I can hook you up. But most times your parents will take care of all this stuff. They'll send it to their accountant. But so you're making $800, and what I'm gonna do, every single paycheck, I'm gonna take out 10%. So 10% out of 4,000 is, this is an awful example. This is a really awful example, and I do not have an eraser right here. Oh, there's probably chalk all over this. All right, screw this. We're going 200. This is not rehearsed, okay? Not rehearsed at all. 200. You spent 200 on pants and food. Okay, I don't know why it's pants, but I guess really pants and boots. But all right, 200, and let's say you have 400 in taxes that you have to pay into the government. All right, so you have to pay 400. You got $400 in this reserve account that I take out. So I'm not gonna pay you and then say, hey, I need this money back. I'm just gonna automatically take out 10% from all your paychecks. I'll have $400 for you. All right. So what we do at the end of the year, you go to pay your taxes on your $4,000 that you made. You have to pay in $400. Now you're saying, what's the $200 for? Here's what the $200 is for. You pay this into the government. You're supposed to. All right. But then you meet with the accountant, CPA, or just have your parents do whatever you have. I can hook you up either way. And you take this 200, you subtract it from that 400. So that means that, these are called tax write-offs. Tax write-offs. All right. So this is tax. We'll just cross it through. That's a tax write-off right there. $200. And then 400 minus 200. You're only paying $200 in taxes. But guess what? You're getting the full 400 back. So you get a $200 bonus at the end of the year. All right. We'll do one more example here. I feel like I am a professor at this point. All right. So here's what we're gonna do. We're gonna do a bigger one though. All right. Let's say you're making. All right. This is gonna test my math skills here, but here we go. All right. We got $15,000 you make in the year. All right. You're working full time. I don't know what the hours are there. You can add up whatever hours you want to work. All right.